So Rick, one of the challenges for fixed income investors right now is generating income from their fixed income portfolio. We actually put a table together where we said, how much capital does an investor need to invest to generate $50,000 a year in income? And it's absolutely shocking. At today's interest rates, you can see on the table that to generate $50,000 in income in a government bond or money market portfolio, you have to invest between $9.8 and $10 million to generate $50,000 a year in income. And as a comparison, our diversified fixed income pool, you'd have to invest about 1.2 million or just under 1.2 million to generate $50,000 in income. So, when you look at the current fixed income market, what are some of the risks that you see, and how do investors, generate and sustain income from their portfolio?
Yeah, it's very difficult in this environment, and as we noted, I mean, bond yields are extremely low. Government need to finance, their deficits, and with U.S. Treasury bonds at 70 basis points, I mean, it's very, very difficult. And just because governments want us to finance it, as investors, we don't need to. And I think for our clients, they expect different things from us. And so I think when we look at how we can do better for our clients, I think given where interest rates are and the fact that a lot of clients and a lot of investors are hoping that maybe 70 basis points yields might go lower, but with the Fed not really going to negative rates, it's going to be very, very difficult to generate income and actually have a diversified portfolio with bond yields so low, because it's not very far to zero from 70 basis points. And so there's no diversification there. So there's no income and no diversification. I think for us, what we like to do for our clients is, we prefer corporate bonds. We prefer preferred shares to enhance the income, enhance the potential for capital gain. There's ways to protect the portfolio from what we believe is the most kind of underappreciated risk going forward, which is inflation. No one believes inflation will ever come back. Quick story, I was on a sell side call where the sell side analyst was saying that maybe the 10-year bond might rise to 1.3% in the US. He got nothing but pushback.
Wow.
On it ever going to 1.3. So consensus is not that interest rates will rise or inflation will come back. And what happens when consensus is there? It means that surprises can happen. And I think for us, we'd like to provide more income for our clients, provide more protection against inflation going forward, and the potential for reflation. So for us, the floaters and the preferred shares are something that, and corporate bonds are something that we truly believe will add value going forward.
Super. Okay. Yeah. And Warren Buffett has a great saying when it comes to markets, and he says, don't look through the rear view mirror, look through the front windshield of the car. And that's what you're saying with the bond market right now.
Absolutely.
Don't get lured in by these big returns the government bond market has done, and you got to look forward at other parts of the fixed income market.
Exactly.
Super. Thanks, Rick.